When it comes to the stock market, every company experiences both periods of growth and moments of decline. Palantir Technologies is no different. In fact, over the past several years, Palantir has been known for having more upward momentum than downward setbacks. However, that trend changed this past spring when the company's stock value suddenly dropped due to renewed fears about its valuation. Investors became increasingly concerned that the price being assigned to Palantir shares did not align with the company's actual financial performance. Those concerns resurfaced again later in the summer, especially during August and much of September, when Palantir stock struggled and showed visible weakness. Despite those struggles, Palantir stock is now rebounding and beginning to climb once more. At present, it trades less than 4% below its record highs and is already up 25% so far this year. That type of performance shows strong momentum, but the valuation concerns that hurt the stock earlier have not disappeared. If anything, they have become more of a central issue. Palantir's distinguishing factor is its artificial intelligence platform, often referred to as AIP. This software is an extremely advanced tool designed to give government agencies and private businesses the ability to manage tasks, optimize workflows, and analyze real-time information in ways that competing technologies cannot match. The growth of the company has been remarkable. To illustrate the pace, only 1 year ago, Palantir's market capitalization stood at roughly $100 billion. Now it has risen to $430 billion, which ranks it as the 21st most valuable publicly traded company on the planet. That rapid ascent demonstrates how much excitement surrounds the company, but it also feeds into the ongoing debate about whether its stock is priced too aggressively. Palantir's reputation was largely built on its deep connections with the United States government. It first became widely known when its technology played a role in locating Osama bin Laden. The company built a massive and sophisticated database that collects intelligence from hundreds of separate sources, including satellites and drones, which is then delivered to military leaders and intelligence officials to help them make strategic battlefield and counterterrorism decisions. These government contracts remain the single largest piece of Palantir's business model today. In the second quarter alone, Palantir generated $426 million in revenue from its United States government contracts out of a total of $1 billion in company-wide revenue. This shows just how heavily dependent the firm is on its government ties. Even more telling is the fact that revenue from the United States government rose 53% compared to the same quarter last year, proving that these government agencies are increasing their reliance on Palantir's platform. At the same time, Palantir is making significant progress outside of the government sector. Its expansion into the commercial marketplace has become equally compelling. The company has been organizing training sessions known as boot camps to demonstrate to potential customers how its artificial intelligence platform could help their businesses directly. These sessions have proven to be an effective marketing tool because they allow potential clients to see firsthand how easily the system can be integrated into their operations. Once they experience the efficiency of AIP, many decide to adopt it. As a result of these efforts, United States commercial revenue skyrocketed 93% in the second quarter alone, reaching $306 million. In addition to revenue growth, Palantir also signed an impressive number of new contracts. During the second quarter, the company closed 157 separate agreements that were each worth at least $1 million. Out of those, 66 contracts had a value above $5 million, while 42 contracts exceeded $10 million. This shows not only the breadth of Palantir's customer base, but also the depth of financial commitment that many businesses are willing to make when they decide to use the artificial intelligence platform. These results prove that Palantir is not only scaling rapidly, but also securing long-term, high-value clients. Looking forward, the company offered guidance for the third quarter that projected revenue growth of more than 50% year over year. Executives also stated that this quarter would deliver the largest sequential revenue increase in Palantir's history. While those numbers are extremely encouraging, many critics remain focused on the question of valuation. They argue that the price-to-sales ratio is alarmingly high and could make the stock unsustainable at its current level. To put that valuation into perspective, Palantir currently trades at a price-to-sales ratio of 134, while its forward price-to-sales ratio is 104. This level of valuation is one that even Nvidia never experienced during its historic climb to a $4 trillion market capitalization. If Palantir wanted to match Nvidia's current price-to-sales ratio of 26 without its share price falling, the company would need to produce more than $17 billion in revenue over a 12-month stretch. At this moment, Palantir has brought in only $3.4 billion over the past year. That means the company would need to increase its revenue by over 5 times in order to justify the share price at a more traditional price-to-sales ratio. Making matters more challenging, the price-to-sales ratio has been rising even higher as the stock price climbs, with the ratio increasing nearly 30% in just the last 3 months. This dynamic has led to serious criticism from analysts and short sellers who argue that Palantir stock is far too expensive to buy right now. They see investors paying a huge premium for ownership of the company, and some believe this level of enthusiasm cannot be maintained. Citron Research even released a strongly worded report earlier in the summer claiming that Palantir's valuation was detached from reality and fundamentals. That report caused the company's stock price to drop by 18% in a short period of time, showing how sensitive the shares are to valuation-based criticism. So the ultimate question is whether Palantir is a good stock to purchase at today's price. The answer depends largely on what type of investor you are. If you focus heavily on valuation and financial ratios, you will likely find the stock uncomfortably expensive. However, if you place greater emphasis on potential, growth, and innovation, then Palantir could be appealing. My personal stance is that Palantir remains attractive even at these levels. I believe it is a revolutionary business that will fundamentally change how governments and companies operate. In my view, the stock market has not yet fully recognized the true potential of Palantir, just as it initially underestimated companies like Amazon during their early years. For these reasons, I still consider Palantir to be a buy at this time. Although there will continue to be debates about valuation and whether the stock price is justified, the company's long-term growth opportunities in both government and commercial sectors are too significant to ignore. Palantir is building a foundation that could reshape entire industries, and I believe that patient investors will be rewarded over time. Essentially, Palantir Technologies has seen both highs and lows this year, with recent drops tied to concerns over its steep valuation, yet the stock still sits less than 4% below record highs and is up 25% on the year. The company continues to shine through its artificial intelligence platform, which supports both government and commercial clients by streamlining workflows and providing real-time insights. Government contracts remain a major revenue driver, bringing in $426 million in the second quarter, while commercial growth has been just as impressive, with a 93% jump to $306 million. Palantir also closed 157 large contracts in the same quarter and expects over 50% year-over-year revenue growth in the third quarter. However, the stock's valuation remains a sticking point, with a price-to-sales ratio of 134 that critics argue is unsustainable, even as supporters believe Palantir's long-term potential makes it a buy similar to early Amazon. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.